Good morning, everyone, and welcome to our first Bridge to the Future session. I've muted everyone just for the ease of discussion. And this morning, we're going to examine some real-life business scenarios to do with finances. Our panel of experts this morning are David Nostrand, licensed insolvency trustee and vice president at BDO Canada; Laura Williams, founder and principal at Williams HR Law; Brian Roberts, president at Nostrand and partner; and David Olesen, senior corporate counsel at David C. Olesen Professional Law Corp. So let's get started. So the way it'll work is I will present a scenario and I will ask the panel to provide us with some guidance on the information that we've given. If you have any questions, I'd ask you to write them into the chat, and I'll be moderating that and monitoring it throughout, and we'll ask questions at the end as a Q&A. So let's look at the first scenario. My business is 8 months old, and because it is an activity-based business, I have had to close my doors completely with no income. My total payroll for 2019 was $18,500 because I was only open for 4 months. Because of this, I am ineligible for the CEBA loan of $40,000. My landlord is trying to work with me, but my rent is $8,000 and we have agreed on $4,000 monthly during the pandemic, with the rest being deferred until later. My bank account is almost depleted. I won't be able to pay my May rent, and I am seriously considering filing for bankruptcy. I have applied for and received the CERB benefit of $2,000 per month, which is barely enough to feed my family and pay my mortgage. What do you suggest I do? Who would like to jump in?
I'll start, since the dreaded B word was mentioned in this scenario. It's a word that none of us like to hear. It's a thought that none of us really want to contemplate. But if that ever enters the mind of anybody, whether it's business related or personal, they really need to speak to a licensed insolvency trustee, because they're the ones that will ask the right questions of you to make sure that that scenario is even reasonable or logical. So when we meet or talk to somebody about that, we will go over their financial situation, both business and personal, since this is usually intertwined with each other, to make sure that those things make sense. Because unfortunately, a lot of the times when individuals find themselves in this predicament, they don't really have the complete picture. And in a lot of cases, they are making assumptions that may or may not be factual or may not actually come into play. So that's really, really critical, because we never want to see anybody file for bankruptcy if they absolutely don't have to. So in this scenario, one of the things I would first start off with them is, have you actually sat down and prepared some kind of financial scenario, some cash flow projections to see exactly what the situation is like? There may be things that you put in there that we can exclude, or maybe there's things that you haven't put in there that we really need to take account of to really clearly understand what your picture is. And from that, and that could take 30 minutes, it could take an hour, it takes however long it's going to take, but it's critical, because that is the roadmap for you to try and make a decision as to whether or not, A, the business is even viable, and B, how does that affect your personal situation? Because the key here is, it's not only you also have a landlord that you have to deal with, and the landlord is probably facing the exact same scenario as you are, but just at a different level. So the important thing here is, once you have a clearer picture of your financial situation, you've got to open the lines of communications with the landlord and work with the landlord, because the landlord might be obviously interested or incentivized to work with you to see if you can both come up with some kind of mutually beneficial arrangement, so that both of you can emerge from this predicament. So that's how I would look at the scenario from an insolvency perspective.
Okay, thank you. Thank you, David.
Yeah, to add to that, to what David said, one of the things that a lot of the small, medium-sized enterprises that I work with are looking for what are ways I can expand my business. So one of the questions we would have is, what is your activity-based business? Are there parts of it we can take online? So, there's physiotherapists, for example, that are doing online consultations. You got to start thinking outside of the box of how can I expand my business to try to provide services, in this, call it new world. In dealing with the landlords, it's, I do some work for both the tenants and the landlords. So I've been sort of sitting on both sides of the table lately. And, one of the things that is very apparent in a landlord and tenant situation that is sort of a constant that all landlords have to accept is that any month that you have an empty building, you will never, ever make that money back. So it's far more in your interest to try to do some kind of deal, however long that may be. And as we were talking earlier, the government's coming out, hopefully with some meat on the bones to this program for commercial tenancies. So there may be some relief there. In that instance, what this individual has to do, though, is in negotiating that go forward amendment or deal with their landlord, is ensure that included in that is wording that says you will apply for this, you will report to me on it. If you do get it, you will apply it to my rent, and you won't just put it in your pocket, because there's a lot of that could go on and the tenant doesn't have any idea what's happening. So you really have to try to somehow police that. And then the other thing I would probably add to this is that there's a comment about the mortgage aspect. Similarly, turn to your bank, turn to your credit union, whoever's providing the mortgage, have a discussion with them. There's government programs that are working with payment deferral and re-amortizing your loan, perhaps capitalizing the interest, things to that effect.
Thank you, David. Anyone else on the panel that would like to chime in?
I think to further kind of elaborate on everybody's kind of comments, what it comes down to is we're all in this together, and the landlord and the tenant both have to kind of work together. And to get through the other end, hopefully we were hoping like 3 months was going to be kind of the end of it. I'm not sure if that's going to be the case, or, there's so much uncertainty in all this, but if we can just all work together for the tenant that's got the activity-based business, as everybody else has mentioned. You've got to see if you can kind of somehow expand on your business to try and make it viable over the next little bit until we can get reopened and everybody's back cash positive. And so budgeting is going to be really important on this whole aspect, basically figuring out what your costs are, what's the minimum balance your expenses you're going to have to run with to keep your doors open and keep running, and then your variable costs. Like, there's a lot of government programs out there. I know you mentioned that some you don't qualify for. They're close, but hopefully we get some really good rent, a commercial rent program that we're supposed to hear about today, and then we can go from there. So
okay, thank you. I'll move on to scenario 2 then. So I run a small business with 2 employees who were recently hired in October 2020. I have laid off my employees whose total payroll was only $11,000 last year. I pay myself through dividends, so my pay is not included in total payroll. I do qualify for the Canada Employee Wage Subsidy, so I have called my recently hired employees and asked them to return to work. Because their weekly pay is $700 and CERB pays them $500 a week, they have told me not to worry about them. They will stay on CERB, but I want them to return to work to generate revenue. Am I able to hire other people to replace them if they don't come back? What are my rights and their rights if they decide to come back when the 16 weeks of CERB come to an end? Is there any other funding that I might have access to that I haven't thought of?
So I'll start there because the question seems to really focus very squarely on employment-related implications. This is one of the most challenging issues that a lot of employers are facing, particularly those that are still operating on a essential workplace basis, so they can still run in brick and mortar or still provide services that are interfacing with the public or with their clients and customers, where you have employees that, for a variety of reasons, similar to this scenario, where you have employees that are at a wage level that's close enough to the CERB that they're electing to just stay off and collect the benefit. But there are also work refusal issues related to employees being fearful of working because they're fearful of either contracting the virus or carrying the virus if they're interacting with the public or coworkers to loved ones that may be vulnerable or susceptible due to their own health conditions. So specifically with this scenario, to the question what the employer's rights are, if the employees are specifically saying that they don't want to return because they prefer to collect the benefit, and the employer requires employees to perform work so they can still continue to generate revenue, that should be documented. The employer should essentially, say to the employees that, I require you to work, and if you're not returning to work, then, either you're abandoning or, you're quitting from this employment, because you don't want to not having taken that position. So at the end of the CERB period, the employees do believe that they've got a right to return to work. Because if there's work to be done, then it certainly is the employer's right to hire employees to perform that work. Now, there's a tricky issue here that employers have to make sure that they keep their eye on, and that is if the refusal to work, or if the employees are taking the position that they can't work because they are fearful of working, they are fearful of going outside due to COVID-19 related reasons, they may be off due to reasons related to COVID-19 that would constitute would be covered under the leave provisions, the newly instituted leaves, which are job protected leaves. So you have to be very careful there, because any mental health related condition, anxiety disorders, etc., will be protected by human rights and could constitute a justifiable reason for them to qualify for the infectious diseases emergencies leave. That's the newly amended leave under the Employment Standards Act. So you don't want to run afoul of that. So you've got to be very careful. But certainly, the employer in this case, if there's work to be done, if the employees are just squarely saying, look, we pretty much net out the same if we stay at home, then the employer should make sure that they paper that, and they're free to hire pretty much with impunity. The tricky thing, I'll just add one more thing, which is interesting how the CERB features in the Employment Insurance Act. It doesn't fall under the area what the normal requirements that are on employees to remain available and actively seeking work. So, whether or not the employee's refusal is something that will disqualify them for continued eligibility for CERB remains to be seen in terms of how that will be treated, particularly since the government has cautioned employers. Let's say, for example, this employer wants to advise the government through maybe an amended record of employee, add some comments in the comments box of the record of employment. The government has specifically indicated that they do not want employers to complete the comments box. So I've been vocal and saying that, well, they haven't amended the record of employment. The comments box still exists. Obviously, they didn't want a lot of employers completing the comments box because it protracts and makes the adjudication process more complicated and more complicated and involved. And it was anticipated that there would be a lot of applications for CERB during this time. So, I think as we're more kind of into things now, it may be a situation where just to cover themselves, employers may want to, if they're going to be completing an amended record of employment in these circumstances, they may want to indicate in the comments box the reason why the employees are refusing, just as an added measure of protection.
Okay, thank you. Thank you. Anyone else that would like to comment on this one? David?
Yeah, I just add to that. A colleague of mine was dealing with a situation similar to this, and the employer made note to the employee that said, I just don't feel like coming into work, I'll accept the CERB, that that would actually constitute a voluntary refusal to work, which under the terms of CERB would disqualify them from the CERB in the first place. And so the employer said, look, I'm going to fill in that comments box on why you're refusing to work. And then that's going to get registered with the government. So you're going to both lose your job and lose CERB. So do you want to come back to work? And the employee came back to work. So that was just one area that they tried to do that solution. And then I just add there's a couple of provincial things that this employer may look to. You know, there's WSIB payment deferrals. There's employer health tax relief if they qualify for that. So there's a couple other places where they may save a little bit of money now to help them through the time.
Thank you, David.
Let me add one thing to that as well, because the scenario painted the question of whether the employee would be getting more money on CERB or getting more money if they came in back to work. So with the CEWS program, depending on how much you actually pay that employee as a regular wage, and as to whether or not as the employer you qualify under that program, I believe the maximum amount that you can pay an employee is up to $847.50 a week. So if they qualify under that, you can make the argument to that employee, you might actually be better off coming back to work because I can pay you a higher wage since I'm getting subsidized by the government. So it is an analysis worth looking at. I have one client that had that happen to him, and he's back at work for that exact reason, because to him, he needs that extra $347 a week. So it's just something to keep in mind if you have an employee that's saying, well, it's better for me to be off at work. It may actually not be, depending on whether the employer qualifies for that program or not.
And it also depends on whether or not the employee is further receiving earnings up to $1,000 for the CERB qualifying period, because that would put them over the amount that the employee might receive under the CEWS.
Right.
Yeah. Thank you. And I'm just going to remind everybody to use the chat if you have a question. We have one that's just come in. With the emergency order, does collective agreement supersede or not?
In what context? So just a fundamental concept when it comes to a collective agreement. A collective agreement is a contract, as we know, between the union and the employer, the union standing in the stead of the employees as the bargaining agent for the employees. So it's a contract, and you really can't, not really, you can't contract out of statute or out of legislation. So a collective agreement is not going to supersede a government order, and it's not going to supersede legislation. So I don't know if that covers the angle of that question, but that's something that needs to be borne in mind.
Okay, thank you. So we'll go on to scenario 3. I am a retail store who did not have an online store, so there has been little to no income coming in. I worked with a local company to develop an online presence in e-commerce. This cost me $3,000, is generating very little income to date. My rent is $6,000 a month. My landlord told me she has bills to pay as well and needs the rent. I paid for the month of April, but will not be able to pay my May rent. I am trying to survive, but I don't have a business line of credit, so I have been dipping into my personal line of credit. My fear is that I will end up with an abundance of debt and no way to pay it back. Is there anything else I should be doing to keep my business viable when we come out of this?
I'll delve into that one first, because I see that happen all too often in my line of work, where you have an industry or a company or a sole proprietorship that is short on cash, is not requiring enough, and you decide to invest personal assets or personal funds into that business. The most important thing you have to do, and it kind of ties into scenario 1, is you really need to sit down, as Brian had mentioned, and figure out what the budget is for that business. Is it actually financially viable? Because if it isn't, it doesn't matter how much you put back into it, it's not going to make a difference, and you're going to lose all of your personal investment in that business that just isn't financially doable. So that is really the first question you have to answer in this scenario is, if I put that money in, is this company going to survive? And that's a real tricky question, because there's so many unknowns under this scenario that you're not really going to get a definitive answer. In this case, what we try and do is we play out a bunch of what ifs. You know, what if this happens? What if that happens? And we could have anywhere between 3 and 5 different probability outcomes, and you have to almost decide what is your risk level of tolerance in this one, because if 4 out of those 5 scenarios aren't good, maybe it's not a good idea to invest your personal assets into this, and you have to unfortunately think about the serious possibility of shutting down the business. If 4 out of 5 of those scenarios are positive, then maybe it's not a bad idea to do that. But those are the things you really have to look at before you start pumping personal resources into a financial entity, because if you're not going to get it back, then it's gone and you're never going to recover it. So that's the insolvency side of the aspect of this scenario.
Thank you. David?
Yeah, one of the things I would look at with this business owner is it's great that you created an online presence, but you have to make people know you have an online presence. So what kind of marketing are you doing? And it's a difficult time, but again, thinking outside of the box, trying to get your name out there, trying to identify to the people that, especially past customers. So if you have been collecting data over time of who your customers are, you can start trying to go back to through email or even telephone calls to past customers, letting them know you have an online presence, creating marketing campaigns and sales and things to that effect, trying to emphasize and promote your online business. So that'd be the first place I would look, and then that'll help generate some revenue. Again, as we've sort of talked about on all three scenarios, the landlord may say that they need their rent to pay their bills, but as we've said before, landlords have to make deals too to try to keep things going. So you want to get to he or she wants to get to their landlord, make sure that not just working out a deal in the current, but that it goes off into the future, understanding that most businesses aren't just going to take off as soon as everyone can get out of their house. It's going to be a very low sloping curve of economic regrowth. And again, make sure that the landlord is applying for the rent assistance program and that it's being disclosed to you. The other thing I would look at is, depending on the extent to which they can develop their online presence and be generating that revenue, there are some business credit availability programs that are out there. The government is repositioned some work with both the BDC and the Export Development Canada for working with small and medium-sized companies. There's for example, BDC now has a co-lending program where they'll work with SMEs. It's been funded up to, or they'll give credit amounts up to 6.25 million. And then they'll go work with institutional lenders, typical banks, in putting together some sort of a loan program for SMEs.
Thanks, David. Is there anybody else who'd like to comment?
Yeah, I was going to, when I read the scenario over, there's a lot of unknowns in terms of, we don't know how long this business has been open. If they were very successful as a retail store and then just trying to come into an online presence, that's obviously a huge shift. And during this time, maybe they're just doing it just to get through the 3 months, or well, wherever we're going to shake out with that before we can open up our doors again. Hopefully, I mean, with budgeting and cash flows and just like everybody mentioned, marketing as well, trying to get products moving online. It's definitely a hard time, and I definitely wouldn't give up. But work with your professionals, work with your bank, and utilize all the government deferrals that are available. So.
Great, thank you. Anyone else on the panel? No?
Nothing to add there, no.
Okay. So we'll go to scenario 4. I own a local restaurant currently offering curbside pickup and delivery. My rent is $8,000 a month and my current sales are not covering my rent. I have worked out a deal with my landlord to pay a third of my monthly rent now and defer the balance to be amortized over the remaining months of the year. I have applied for the CBA loan and have been approved. I have laid off all but one of my employees, but I'm now worried whether I will have a viable business when we come out of this, especially if social distancing remains in effect and I have to limit the number of clients that can eat in. What are my obligations if I am not in a position to rehire my employees and instead have to look at releasing them?
So what isn't stipulated in the scenario is the length of layoff that's been applied in this situation. So most of us know at this stage, because layoffs has been a reality for many businesses, that Under the Employment Standards Act, there are two lengths of layoffs. So there's a shorter period of layoff where you can lay off employees for up to 13 weeks in a 20-week period, and a longer period of layoff, which is 35 weeks in a 52-week period. Now, to be eligible to lay off for that longer duration, you have to meet certain conditions. The most common condition is to continue benefits or to continue making certain contributions or payments to the employees, such as if there's pension contributions or what have you. But the most common way that employers avail themselves of that longer period of layoff is by continuing benefits. So the reality is, for a lot of businesses, unfortunately, is that they may not be in a position to recall employees prior to the end of the layoff period. And the other reality that we're facing is, even with the longest period being 35 weeks, at the end of if you exceed that period of layoff, be it 13 weeks or 35 weeks under employment standards legislation, it becomes deemed a termination, and the employee's termination payments will flow. In other jurisdictions, the layoff durations have been addressed, lengthened or indefinite. Ontario hasn't changed the layoff period. So, if it's the case that it gets to gets to the point where that employer, it could recall employees, but the business isn't viable enough to recall, then the employer has the option of, if there's still some layoff time left in the layoff period, it could leave the employees still on layoff. Otherwise, the employer is going to be in a position of perhaps terminating employees or the employment relationships, in which case you'd have to pay out the employees' notice entitlements and severance payments if applicable.
Okay, thank you. Anybody else, David?
Yeah, I just add one thing. I was working with a restaurant in downtown Toronto in sort of a similar situation, making ends meet. And they're doing a fairly decent delivery service to a lot of existing, sort of regular customers. As we looked at their current costs, outside of the usual, one of the biggest things or the glaring items was the cost of delivery. So they were using Skip the Dishes and Uber, and they were paying basically 30% to the people delivering the food. So it was actually cheaper for this restaurant owner to hire back an employee, pay for gas, cover some of their insurance, and they would make more money on a per delivery basis than using Uber or Skip the Dishes. So that may be one way of looking, that you could actually hire somebody back, go to some of the programs that they've provided to help supplement that salary, and actually make more money per delivery than using the existing services that are out there.
I actually heard that from a restaurant just recently as well. That's what they did, that they use their own employees to do it. Anyone else who'd like to comment on this one?
Just to build on what David said, and that's the critical. If that client hadn't sat down and reviewed its cost structure with David, you never would have known that. So many of these entities out there are using these services. If it's actually cheaper, as David pointed out, to go a different route but accomplish the same goal, that's why you have to do these budgets and these cash flows, to try and figure out where I can save and minimize my costs so that I can, not eat up all of the revenue that I have coming in. So that's a great example of why we have to go through this exercise.
And David, would it be possible to get some of those forms for us to post online for our members and for other businesses who'd be interested in starting that process?
The budgeting analysis?
Analysis, yeah.
You can go on to our website, and there's a lot of budgeting tools and techniques. I would hazard to guess Brian's probably got the same sort of information that's available to you. So if you just go to BDO Debt Solutions, our website, and just click on the appropriate links, it'll be guided. If you don't find it there, just send me a quick email and I'll send you the basic forms that we use.
Okay, perfect. Thank you. Laura?
Another thing that is just a reality of what we've all been going through is, a lot of businesses are still reeling from what's obviously happened very abruptly, particularly those that have been affected by the emergency orders and now operating on a non-essential basis. And really what has to happen, a comment was made about this earlier, is we've got to kind of get out of reactive mode, right? I mean, businesses now that have to start to think strategically and proactively. And one of the things that a lot of clients that I've found, that I've been dealing with, have found really helpful is their industry associations sometimes have some great discussions going on that you can Just kind of leverage other insights, experiences, missteps, successes to figure out how you can think a little bit more out of the box and creatively, because that's what the times call for.
It's a good suggestion. Yeah, thank you. Okay. Yeah.
One other thing I'd add on that, as far as sort of forms and support, support mechanisms for companies. Canadian Federation of Independent Business has call it a COVID-19 Small Business Help Center. And usually the CFIB is usually quite good in working with small companies on things like providing budget forms or templates and things to that effect.
Thank you. So I just had a quick update. The Canadian Federation of Independent Business will be lowering rent by 75% for small businesses implemented through the Canadian Emergency Commercial Rent Assistance, expected to be operational mid-May. We'll cover rent for April, May, and June and go from there. That's just a really quick update that my son has just provided me from what he watched on TV right now. So I'm sure there'll be more information, and I'll share that with everyone through social media. We have one more scenario, and then we'll see if there are any questions that come in. I own a small business and I pay myself through dividends, not salary. All of my employees are contract employees. Because of this, I am not eligible for the $40,000 loan from the government or CERB. My rent is $5,000 per month, and while I paid my April rent, I will not be able to pay my May rent. My landlord is threatening to lock me out. Because we are a personal service business with touch, we may be one of the last ones to go back to work. I am worried that my landlord will lock me out and then I will lose access to my equipment, which costs thousands of dollars. Would the landlord be able to lock me out with everything that's going on in the world now? Do you have any advice for me on how to deal with this situation? Would like to take that one on?
I guess I can speak to the first part of it, the CERB. They actually would qualify for the CERB. They did say dividends that are paid that are non-eligible do, the $5,000 will qualify for the prior year. So they would be eligible for the $2,000 a month to start with.
Thank you. Anybody have any comments on the landlord piece about being locked out? David?
Yeah, again, I think I would take a first step of trying to talk to the landlord and, let's say, talk some sense into the landlord. And all the things that we've talked about earlier. On the other hand, if the landlord simply won't negotiate, then I would be advising this person, by the time you're getting up to the end of your rent, sometime at night, roll the truck up and get all your stuff out of the location and put it in your basement. Like, it's just the reality of it. Get your equipment out of there, get those things, because once the goes into termination, depending on what the lease says for curative timelines and periods, you want to make sure that your stuff is protected and out of there. One thing I would add is that depending on how this personal service business works, again, they could potentially look at online and telephone presence with their existing clients and customers, trying to think outside of the box a little bit in how they can amend their business plan, their business direction, generating greater revenue. And one other thing that they could possibly look at is the matter of future purchase orders. So again, depending on what sort of touch business they're in, the extent to which that they could generate future purchase orders or future binding contracts, they may be able to look at some sort of purchase order and factoring financing to help them through that.
Okay, thank you. Anyone else on this one?
Yeah, to touch upon David's suggestion, we do see that a lot where we have what I refer to as midnight runs of removing chattels, if you will. This is a real extreme scenario, and under the current circumstances, it might be a case of the landlord not knowing what to do and maybe has their eye on only one option. So the lines of communication, I think, are really important in this scenario, because unless he's got a tenant that's waiting to go in there, that's going to be an empty space, whether or not he distrains or not. because who's he going to sell that equipment to? Right? He's assuming he's going to have a buyer. Now, he may have one, who knows, but I highly doubt it under this economic scenario that we're in right now. So it may be a case of not knowing what your options are. And if you try and create those channels of communication, maybe there will be a softening of the situation. But then again, if there isn't, then you have to look at what other drastic measures there are available. So again, if that equipment is worth that much and you can do something with it, then you have to protect it. And then under those circumstances, you need to do what's necessary to make sure that you don't lose it.
Mm-hmm. Thank you. Laura, did you have something to add?
I do, and it's not, I don't have an answer. I'm just going to throw it out there. Perhaps the gentlemen have an answer for this, because my understanding is, not my lane, but under the Commercial Tenancies Act, the employer could, the landlord could lock out the tenant, but can they really seize the chattels? I thought it was the case that the tenant would still have to be given access to their equipment at some point on a time agreed to with the landlord. So they can't really, from my understanding, they can't seize the equipment. They can lock the tenant out of the premise. Does anyone have an answer for that?
Yeah, my understanding of the commercial tenancies is that they can lock the tenant out, and then there's a process for distraining the equipment. So you have to give proper notice.
That's right.
So the tenant has an opportunity to get the equipment back, but that's going to effectively be paying the debt that's owed. So you may be in a position that you get the notice and you can't comply with the notice in any event.
Yeah, I concur with David, because we see this in a lot of insolvency scenarios. So the landlord is obligated to make sure that he follows all the proper judicial procedures,
Yes.
the proper notices, the proper filings. Now, eviction is going to be difficult because as of right now, my understanding is the courts aren't issuing any eviction notices and telling sheriffs to cease and desist. So the process for the landlord is to do those proper notices. The distraint, as David correctly pointed out, has to give the tenant the opportunity to make good on the agreement. And under the circumstances, probably they won't be able to within the time frame. And I believe it's 5 days. I could be wrong, might be as much as 10, but I believe it's 5. But if the landlord has done everything proper and has documented and followed the legal process properly, they then can take the equipment in lieu of rent.
Mm-hmm. Yeah.
But it does require a lot of work on the landlord's part.
It does.
It does, because the tenant can also challenge the process as well too, and it gets really, really ugly and messy. And at the end of the day, there's a lot of costs involved with that process, costs that I don't think the landlord really wants to undertake unless they're convinced that they're going to come out of this with more money even after all of those costs. And again, that's a huge unknown under this scenario.
Mm-hmm.
So it is very aggressive. I haven't seen a lot of cases personally like that right now, because as we've discussed, I think landlords are in the exact same scenario, right? You know, if you've got a really good tenant and for the sake of a couple of months rent, do you really want to take this aggressive action with them?
Mm-hmm.
Where at the end of the day, there might be a better resolution. Again, unless it's a specific scenario that we're all aware of, I tend to tread a little lightly as opposed to hammering down on somebody at this point.
Thank you. I actually have the press release now for the rent, so I'm going to take a minute and just read the pertinent pieces, just because I think it'll be of interest to most people. So the Prime Minister today announced that the federal government has reached an agreement in principle with all provinces and territories to implement the Canada Emergency Commercial Rent Assistance for small businesses. This program will lower rent by 75% for small businesses that have been affected by COVID-19. The government is also providing further details on the program. The program will provide forgivable loans to qualifying commercial property owners to cover 50% of 3 monthly rent payments that are payable by eligible small business tenants who are experiencing financial hardship during April, May, and June. The loans will be forgiven if the mortgage property owner agrees to reduce the eligible small business tenant's rent by at least 75% for the 3 corresponding months under a rent forgiveness agreement, which will include a term not to evict the tenant while this agreement is in place. The small business tenant would cover the remainder up to 25% of the rent. Impacted small business tenants are businesses paying less than $50,000 per month in rent and who have temporarily ceased operations or have experienced at least a 70% drop in pre-COVID-19 revenues. This support will also be available to nonprofit and charitable organizations. So that's the actual official press release from this morning. So it sounds like there is some help coming, which is great. I don't see any questions in the chat. If anybody has any questions right now, if you could just type it into the chat to me privately and I will bring it forward to the panel. I want to thank the panel. This has been very informative. I think a lot of good suggestions and answers for people who are looking for some guidance on finances. I'll just give everybody a minute to see if there's any comments coming through.
The other thing as well, Sandra, is if anybody wants to chat with any one of us directly, please don't hesitate to reach out to us. Obviously, we're working remotely as well, but a lot of us, as we can see here today, are available via teleconferencing, Skype, FaceTime. A lot of my clients, I'm talking to them through FaceTime, and a lot of it obviously is through emails as well as on the telephone. So the resources are there for the business community to use, and I urge them and encourage them to reach out to us and get the answers to the questions that they have, because that's the most powerful tool at their disposal, is the correct answers to the questions, as opposed to making a wrong assumption and then unfortunately heading down a wrong road. We don't want them to do that.
Okay, thank you. Yeah, and then we're very lucky that some of the panel members have offered to provide some free support to businesses who are still in need or who have other questions that they'd like to ask but aren't comfortable doing it here. So if there is anyone on the call who would like some more support, please just reach out to the chamber, to me directly, s.ferry@aurorachamber.on.ca, and I'll make sure that you get connected to someone who can provide you with some answers. So it doesn't look like anything is coming up for questions. Oh, we opened up. Okay, so we opened, here's a question. We opened up a new office in Orlando, Florida, expanded our office in Concord, hired 3 new people in January. Rent is double, including a new landlord in the US where we don't have any relief like we do here. What would you do if you were in my case? Does anybody have any experience with US?
This is in Florida?
Orlando, Florida, yeah.
My experience with Florida is that they operate under their own rules with respect to the laws that apply in insolvency scenarios. So I'm guessing they probably have different rules that apply to their state versus what we experience up here. I couldn't even begin to imagine what the employment laws are like down in Florida. But if my experience with the other side of things is they operate under their own mandate. So that's, don't assume what you can do up here is the same thing that you can do down there.
That's right.
Yeah,
yeah, I would agree with that. I work with a couple different companies that one's a retail company, the other one's a property developer that is doing a fair number of development in Florida, and there are a lot of things a person can come across that are very different than how we do business, let's say up here. My advice would be through a colleague or someone whose referrals you may trust, is seek out, depending on what your situation is, a lawyer, accountant, business professional in Florida, to then give you the proper advice on how to manage things in Florida.
I agree.
And he is saying both in the US and Canada, he's asking for advice for both, but I think we've answered some of those through questions and scenarios that we had.
That's right.
And then I have another one. Anything new about the 40,000 for businesses that don't have T4s? Brian, can you answer that one maybe, or?
Currently, there's they've just lowered the T4 balance to 20,000 for annual salaries. I was hoping they would add something for dividends, and we don't know. Maybe it'll change yet, still again. But for now, you still have to have a payroll of at least 20,000 and a cap of 1.5 million.
Now,
So,
for this person, you did mention about dividends being valid for CERB, right?
correct. You can use dividends to qualify for the $2,000 a month CERB.
Okay.
Yep.
Okay.
Yeah, I was hoping they would change that rule because they said $20,000 for the last fiscal year, which I'm assuming ends at December 31st. What I was hoping they would do with that was they would say $20,000 within the last 12 months.
Mhm.
Yeah.
Because a lot of companies that may have started up in the middle of summer or the late fall last year wouldn't qualify for that reason. But if you take the first 3 months of this year, if you were to add that back in, they then might qualify, because that was the answer I was trying to figure out for scenario one.
Yeah.
How do I get them up by another $1,500 so that they would qualify? Right? Do I file an amended T4 or claiming that I forgot to pay somebody in 2019? I don't know. But those are the kind of things that you have to think about when you're trying to qualify for these government programs, because there might be ways that haven't even been explained in the government releases on how you might. So, don't assume that when you read the application that, if you can't answer all the questions properly, you still can't qualify. I think there might be a way.
Well,
So,
and also don't assume that things are going to remain as they are today, because things have been changing on the daily. So we might see kind of the evolution of the requirements so that it is up to perhaps, February 28 or to March. So the government has been pretty liberal in ensuring that the programs and measures apply to as many businesses in need as possible. So, we've got to keep our eyes on the changes daily.
Yeah, and we have brought forward the point that David made earlier around new businesses, because those are the ones that we're hearing from as well that don't qualify for anything because they've only been open for 3 months in 2019, and so their T4 doesn't allow them to qualify for anything.
Mm-hmm.
But we have brought that forward to the government. We do a coffee with the chamber every Thursday morning, and MP Van Bynen is with us every morning and takes back our comments and our concerns, which is really great. So. And we're also doing it through the Ontario Chamber of Commerce and the Canadian Chamber as well. So I don't see any other questions here. So I'm going to thank the panel very much for being here this morning. We're very appreciative of your offer to help our members and our businesses in town. So thank you very much. And I hope everybody has a great day. And yeah, we'll see you again next week.
Thank you.
Thanks, everyone.
Thank you.
Everybody stay safe.
Yeah.
Thank you.
Safe, everyone. Bye now.
Bye-bye.
Bye-bye.